Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. This is my weekly trade review, where I review a NASDAQ trade, a 9:30 open NASDAQ trade, where I'm looking at the future market, although I'm actually trading QQQ on this because I like trading the options better than trading the future contract. First of all, this is all for educational purposes only. This is not a trade recommendation. This is to show you some of the things that we do here at Right Side Trading. We're looking for you guys to contact us and maybe get some coaching, some education, find out more about other things that we do. We here at Right Side Trading like to say we can see it, we know it, and we expect it. Based on that and based on just looking at the charts, we are technical traders. We know when to get into our trades and get out of our trades. It's ours. You know, we all are humans. So I'm gonna show you what today is gonna be one of those. This review is gonna be a little different than some of the other ones. I'm gonna actually show you a bad trade, you know, that ended up being being a good trade in the end. Like I said, this is all for educational purposes only. Check with your financial advisor before you endeavor into trading. Check with your significant other. Make sure trading is something suitable for you, because in trading you can and you will lose money. You can and you will lose money in trading. So be very careful about where you get your education from and how you approach trading. So let's jump right in here. This is our website. Check us out here. Sign up, subscribe. We have a lot of things going on all the time. Wally is always into something out there. So check us out. I'll be posting this out here on YouTube page. Also, we have a Right Side Trading YouTube page I need to start bringing up, and that's where everything will be going. But let me get right on into the trade review. Like I said, this is my weekly trade review. Today is actually November 18th. I'm actually getting back on schedule, although I don't place them out there until a week later. But this is going to be for the week of November 13th through November 17th. Like you just saw our website, visit us there, sign up. You can need to contact me. You can contact me at Solomon@rightsidetrading.com, or you can contact us at info, that's INFO, at rightsidetrading.com. Okay, morning. Like I said, this is a morning future. I look at the future. I still look at the future market. It was still, that was my best trade that I had out there trading the NASDAQ. So I still use it as almost like an indicator for myself to decide how I'm going to actually trade my QQQ. But I'm looking at that 9:30 open, because you can't trade options until 9:30. And I usually have to wait until they settle down anyway before I do actually start trading them, you know, based on, because again, the liquidity, you want to make sure the liquidity on the Qs is no issue. The thing is, sometimes with where I actually trade my options at, the spreads may be a little bit wide right at 9:30. I actually have to wait and let the spreads come down within a couple of pennies, you know, and then I'm okay with actually placing that trade. But I'm looking at a 5-minute candle on the NASDAQ future. If that candle is red, basically all I provide here is the basic rules. I have other videos out there where I provide other little bit more advanced rules, but still not everything. I'll let you know. There's other indicators that I use that I don't even talk about much here at all. You see them on some of my charts, but that's about as much as I give out on that stuff. So I'm looking at a 5-minute candle, red, trade down, green, trade up. I look to make 5 points or more, try to lose 5 points or less on these trades. That's the basic rules. You know, one of the rules is doji. That's $1 or less between open and close. That's a no trade. Another rule that I actually share on these videos all the time now is if that first 5-minute candle from high to low is greater than 10, that's a no trade. And when I say no trade, I mean you're not really basing your trade off that first 5-minute candle. You're looking to, if you want to place a trade still, you're looking for your next best play. Then you're actually bringing in other indicators based on, and you're also looking at what else is going on in the market in order to place that trade. So let's jump right into it. On November 13th, it was up in 10. Pretty straightforward. November 14th was up and stop. That's when I actually placed. I'm going to get a little bit more in detail. I placed the trade on that day. I should have stopped out, but based on me trading and based on the position size that I had at that time, I didn't stop myself out. I actually ended up carrying that trade for an extra day or so, And it ended up turning into a swing trade, and actually ended up being profitable for myself. Because again, it was earnings. Earnings was still going on. I actually had to look in the earnings. I'll get a little bit more into that later, as soon as we jump over to the charts. And then, as you can see, the rest of the week really was no trade, no trade. Next best play was an up. This was an up, got stopped. But really, once you look at that chart, the next best play based on that first 5-minute count, it was almost a doji, almost 10 points. It would have been best just to pass on that trade. So now let's go ahead and bring up the charts and take a look and see what was actually going on. Boom. This was Monday. Let's jump straight to my reviews, the way I've been doing it, the little detailed one that I want to get into on the 14th. So on the 14th, that was this day here, and let me just do this also. Let me go over here and show you the total market, what was also going on. Make sure this is QQQ. This day right here is the 14th. This was the day I actually entered this trade. Let's zoom, I'm going to zoom in and zoom out. We're going to spend, like I said, I've been spending bad trade altogether. First of all, the market, this here is the 14th, this first doji. And the market had been going sideways. I thought I had, a green bullish engulfing type day. I was expecting the market to go up that day, so I ended up making a bad entry. First of all, the market had been dropping. My first candle was it was up, so I was expecting the market to go up. It had already came. The thing was with me, the market had already came up. I missed my entry down here in this area, if you can see this on this candle here for my next best play, and I ended up getting into the trade late, too late. And this market had been trending down anyway, and then me trying to trade it at the top of a daily top, almost near daily top, and expecting it to go higher, it just didn't work out. That market ended up dropping on me. I didn't stop myself out where I should have stopped myself out when it got past my support, my demand area here. But then there was a lower demand that doesn't even show up on this chart. It came nowhere close to that. Can you see it over here? No, you cannot see it over there. I do a lot of my stuff over here on the future charts. So I ended up getting into this trade. It came back up later in the day, got close to where it was possible for me to get out of this trade, but I decided not to. And it came back again here where I was, again, could have got out of this trade, but I decided not to. I remember I was with one of the other guys. We was talking on the phone, and he's not big into playing earnings the way I like playing earnings. But I was looking in the future, looking at the next few days and seeing what earnings was coming up. It was nothing major. It was a few software companies, a few retail companies. Walmart was coming up, but Walmart usually is not a big mover in the market. But you never know with these software companies and these retail companies, they usually are not a big mover either in the market. So it was kind of risky actually leaving that trade on for the next few days. So, but let's go back and take a look at what I actually went through. I went through this thing here, actually dropping down here. This was my next supply, my next demand zone that it came down to the next day. And it never really got above this demand zone that I had. So it had me a little bit worried. And that's where, again, I went back and revisited, okay, what earnings are coming up here? And it wasn't that much, for this day here. And then I just got, again, sometimes you just need to be in the market so you can get that luck that's out there. That's all I can say on that. And I didn't add to, a lot of times I would add to my, again, a lot of times I would add to my position, and I didn't. I didn't add one on any of these pullbacks. I just let it go. And then the following morning, the market was going up. The market was above this area. It had got above this area and stayed above this area. Then it was actually taking off. So I ended up staying in this trade a little longer than I normally would stay in this trade, not just to get my normal, 10 cents or 12 cents. I actually got probably close to 50 cents on this trade. So that was good, and that covered my whole week for me on this one trade. Normally, if I'm just scalping $100 off the market with my 10 contracts, and I had 10 contracts on this particular trade, and that was the other reason. It was only for me 10 contracts. That was still a small position, so I was okay with holding that position as long as it didn't do anything crazy, and it didn't. And in my book, it hadn't done anything crazy to me other than it dropped down here to another demand zone. So I was okay with holding that trade and actually getting out of that trade a little bit later. So let me just switch back over here. That's all I really want to show on that. Here, show you the actual trade, and then we'll again. I got into that trade on the 14th around almost 10 o'clock, right where I was showing you on the chart. If you go back and take a look at that, and I didn't get out of that trade until it started flattening out on the 16th. And as you can see, I got out of that trade. I got executed 10 contracts, got into it at 375, got out of it at 429, and that was the trade. So now let's go back. That's what I want to review on the trade. And I get where I want to show you guys one trade or a trade every week. If I don't record one, I want to go a little bit more detailed in the trade just to show you exactly more in depth about exactly what I'm doing. Now let's get back to just doing the review of what actually happened. Okay, on Monday was up for 10. Let's just take a quick look at that. Boom, 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 boom. It was an easy trade. This is one of those ones where I said Mondays here, it's gotten where they're actually really straightforward trades. 92 to 02. You got your 10 points, no problem. Then the next day, this was the day I actually had my bad trade and all. And if you look at that, it was up. This wasn't a. If you let me zoom. Let me go back. Scroll back a little bit on this. Let's zoom in here. This was up, as you can see, but the market had been dropping. This is one of those ones where you kind of, it looks almost like a doji. You're looking at high and low. Low was 91, high was 97. It wasn't quite 10 points. It's one of those ones where you almost really want to pass, but if you just had a good day the previous day, that's one of the whole mental things here about trading. You're ready to jump on anything and everything. You think the money is easy to make. And this was my bad entry where I actually got into this trade, you know, thinking again it was going to break this top and reverse back up, and it did, and it actually went against me right away. So that ended up being up, and actually got stopped out really on this first candle. You should have been on, if you played it by the basic rules. And me even playing it by my rules, I should have been out of this trade at this time. But I started looking around in the market, trying to decide, okay, if I'm going to let this market thing go, is this market back? You know, you start thinking like that, especially when you're trading. I'm on the phone with somebody else, but he's really not trading what I'm trading. He's trading something completely different. So let's go on to the next day. Take a look at this. This was Wednesday. This was a greater than 10 no trade day. And if you look at this from high, you see 57, 67, greater than 10, no trade. Leave those things alone. Learn to leave those things alone. Although it was a good to the downside, if you're into playing it to the downside, you could have played it that way. But me, but you would have had to been in and out on one candle. And that happens a lot. Once you get good at this, you get good and you practice this, you can execute these trades and be in and out on one candle. But that's what a lot of times it's going to take when you get these big candles like this. It's going to be something strange. It's going to be something a little bit different. That's why that greater than 10 is one of my rules. Go on to the up, went the wrong way. Go on here to Thursday. Thursday was another, no trade greater than 10. Let's take a quick look at that. Up. This was that day that it actually popped up, and then the day that I got out of my swing trade. So again, this was, if I was in front of it, if I wasn't already in the position and wasn't too nervous about placing another position, I would have added. I would have been trading 10 contracts getting into this. Let's remember when I say 10 contracts, I'm talking 10 contracts options, not future contracts, guys. So I want to make sure you got that straight. But I would have been in this thing, playing it that way. Look at this, how this actually went up. So it was greater than 10, so it's a no trade. But if you was actually trading it based on the basic rules, you'd have been into this trade about right here. You never got stopped out of this trade, and you would have easily got 10 points or more on this trade. I'll take this thing all the way to where I actually got out of this trade. I got out of this trade right here in this area. The market had started going sideways. I didn't know if the market was going to reverse back down or what. So that's where I actually got out of my trade, right around in this area right here, when the market was doing this little sideways action, preparing to go up even higher. Boom, which it did. And we'll take a quick look at it over here. This is my exit. The market actually went 30 cents higher. So that would have been at least 15 more cents on my option. Easy 15 more cents on my option that I didn't get. So I don't get tops, I don't get bottoms. I just trade what I see in front of me. And then on Friday, it was an up stop. Let's take a quick look at that. Up. And this is that one where, you know, you look at it, it almost looked like a doji. It almost looked like a big candle. You look at it, and this is one where my next best play should just leave it alone. You know, because again, you're in this choppy area in the market also. You're high up here if you've got into this trade, you know, looking to enter this trade 45 to 55. You know, you only would have been looking to get 5 points on this trade too. That's the other thing. So that's why a lot of times I'm looking at that. Then my stop, I'm getting into this 45 down to 40. You know, my stop is right here where I want to get back into this trade long. You know, it's not way below here. So that's another reason why I say next best play was just to pass on that one. And that's what it actually did. And that's pretty much it for the week. Again, let me switch back over here. You saw that. I'll switch back one slide. Again, like I said, Monday was a good up. This was a down, up and stop, but I actually placed the trade. Bad entry, bad everything about that trade. But I ended up swinging it, and it actually came out pretty good on me. The next few days were actually it was a no trade. I exit my trade here on the 16th. This next best play with up in 10. Also here on the 17th was up, but next best play really was kind of like pass on that day. And there was that again. Again, that was my weekly trade review. It was it really wasn't. It ended up almost being like it was a wishy-washy week at the beginning, but in the end, it ended up being not a bad week. It ended up actually being a pretty good week. I'll be posting this video out here at Right Side Trader, and please subscribe. Check us out also at RightSideTrading.com, where you can learn to see it, know it, expect it, and learn to trade with confidence. Again, thank you for viewing. Have a great weekend and have a great week trading next week. Talk to you later. Bye.